Hi, this is Alessio. Hope you're well. With a quick update on Bitcoin and also the stock markets. In just a few moments, I'm going to tell you about a very important and very interesting leading indicator on the markets. I'm going to explain to you what this potentially could mean on the markets in a few moments. Before I do that, though, I just want to quickly explain and clarify something that I mentioned in yesterday's video. You may recall in the video yesterday, which was called Bitcoin's Next Big Move Setting Up Now, I explained that Bitcoin's rally, this parabolic move higher, has potentially been forming a five-wave structure. In other words, we've potentially just completed waves 3 and 4, the previous highs and lows. And I explained to you yesterday that potentially wave 4 has completed a sort of ABC corrective structure, and that we could soon be forming the next leg higher, a potential wave 5 move towards the first target, about 9,300, and then potentially to the 1272 and 1618 extension. Now, as you probably already noticed, since yesterday, Bitcoin has already rallied and taken out the previous highs of 9,100 and has actually reached our first wave 5 target, about 9,300, which of course puts the next potential levels of the 1272 extension and maybe even the 1618 extension as the next potential targets. That means this, by the way, guys. It means that if Bitcoin continues to see further upside, the 1272 extension is about the 9,500 level. And if we get above that, then that puts the 1618 Fibonacci extension at 10,000 levels as the next potential target. By the way, one important thing I want to mention here is this, which is that if you take a look at this weekly chart of Bitcoin, we've actually reached an important level already. If I just zoom in here, notice that we've hit, on the weekly charts, we've hit the 38.2% Fibonacci retracement at 9,400. We almost reached it, as a matter of fact. Why is that level important? Because if you do a Fibonacci retracement from the 2017 highs to the 2018 lows, notice that this current rally has retraced the 38.2% Fibonacci level of that decline. Now, is that level important? Is it relevant? Yes, it could be, as I'll mention to you in next week's video. The bottom line is, though, that level has now been tested, the 38.2% Fibonacci retracement. But the big question some of you are probably wondering, and some of you are probably asking, is this: well, if Bitcoin is forming this five-wave structure, a five-wave rally, what could this potentially mean? Well, it means this. Because you may remember in a video that I posted some weeks ago, and the video was called "If Bitcoin Has Bottomed, Here's What Could Happen Next," I showed you this important chart. By the way, let me just quickly mention this. There's absolutely no certainty that Bitcoin has bottomed. All right, guys? So there is absolutely no certainty that Bitcoin has definitely bottomed or that we've actually started a bull market. There is a probability that we might have started an uptrend or a potential bull market, but there is no certainty. Okay, guys? And in the video next week, I'll go into the situation or scenario if Bitcoin has not bottomed. But the key thing is this. I showed you this chart a few weeks ago that if Bitcoin has bottomed, for the sake of argument, then we could be starting a five-wave move or a five-wave uptrend towards the 30,000 and 50,000 levels, potentially by the year 2021. And here's why that's important. It means this current rally that we're looking at right now, this current rally, could be a larger degree wave 1, followed by the larger degree potential retracement, or wave 2. And that means this, by the way. As I explained to you in the previous update, the previous video, the wave 1, in other words, the larger degree wave 1, is itself composed of 5 smaller waves, as I explained to you, in fact, in yesterday's video. That means, guys, the current rally we're potentially in could be that 5-wave move of the larger degree wave 1, which could then be followed by the larger degree wave 2, which is composed of 3 smaller waves, or ABC. That wave 2 could potentially take us down towards the 6,000 or maybe even the 5,800 levels. In fact, let me show you this. As I explained to you in that video from some weeks ago, the fact is that wave 1 and 2, the wave 1 of the larger degree uptrend is itself composed of 5 smaller waves, which is potentially what we're in right now, potentially the 5th wave of this larger degree wave 1. And once the 5th wave of this wave 1 completes, then we could be setting up for that larger degree major retracement that could take us down towards that wave 2 potential levels of 6,000, potentially 5,800, or the weekly 21 moving average. As I explained to you in the video last week, the fact is that there are some key levels of support beneath us on the weekly time frame. For example, the 21 weekly average and the key swing point levels, the key levels of support around the 5,800 levels, for example. So these could be levels of support for potential wave 2, not to mention, of course, the 100 daily moving averages as well. And by the way, guys, that kind of makes sense when you think about it, because let's face it, there's a lot of FOMO in this market, there's a lot of fear of missing out in this market, and also because if we go on the monthly time frame, you will notice that the monthly RSI has been overbought for some time. And that is pretty dangerous, because when the monthly RSI becomes overbought, it usually means that the upside is potentially limited. And that, of course, usually precedes potential corrections. All right, guys, I hope that clarifies my point about the potential larger degree waves 1 and 2, and of course the smaller degree phi waves within the wave 1 that I mentioned in the previous video. All right, guys, let's talk about now this particular chart I'm looking at here. This is an important leading indicator for the stock markets, and it's called the transportation index. The reason why we look at the transportation index as a leading indicator for the stock markets is because everything that gets made, everything gets manufactured by companies, has to be shipped, has to be transported. If you think about it, guys, whenever anything is manufactured or whenever you buy anything online, like for example from Amazon, that has to be transported. So there are companies that make stuff and there are companies that take stuff. Therefore, transportation or shipping goods is a key part of the economy, and that's why we like to take a look at the transportation index. Because if the transportation index is lagging the stock market, something may not be quite right with the overall market. For example, here's what's wrong, I think, right now with this picture. The fact is that the stock markets, if we just take a look at the chart for the S&P, this is the stock market in the US. Notice the stock market rally has been pretty strong, and it's rallied above its key moving averages. In fact, the stock market has managed to rally above its 200 moving average and the 55 and the 21 and the 100 and so on and so on. In fact, it's broken through some key levels of resistance. But if we just take a look at the chart of the transportation index, something is not quite right here, because the transportation index is still below its key averages. It's below the 200 moving average, it's below its key levels of resistance, and below this important resistance level. Okay, so this key level of resistance is still over here. So this could be significant here. Why? Because for one thing, we have not managed to rally above that level. So one concerning thing at the moment is, why is the transportation index lagging behind the stock markets? Now, maybe it's playing catch up. We've seen this happen before. So maybe the transportation index is playing catch up, and maybe in a few weeks we'll eventually catch up with the market and break through resistance. We'll have to wait and see. The bottom line is this, that unless the transportation index can break through the 200 moving average and break through resistance by the 10,670 levels here, it's still for the moment lagging behind the stock market. So it's kind of a bit of a warning signal for the stock market. So we'll have to see if this plays catch up or not. On the other hand, if the transportation index does not play catch up, and if it instead rolls over and takes out these previous lows, if it instead rolls over and takes out the previous lows of June, for example, this could be a strong and maybe potential dangerous warning signal for the stock markets. Again, as I mentioned before, the transportation index shows an important factor about the economy. If the transportation stocks and companies, if they're not doing as good as the manufacturing stocks, like the Dow Transportation and the S&P, something might not be quite right with the overall economy and the markets. So we're going to keep an eye on this, guys. All right, guys, hope this video has helped. If it has, please give it a thumbs up. And if you haven't already subscribed, please do so for future updates. Thanks very much indeed. I'll see you guys in the next video update.